Welcome back to Business Week here on Arise News. I'm joined now by Mohammed, CEO of Finance with Mukta, to review some of our top stories in more detail. Good morning to you, Mukta. Always a pleasure to have you. It's been a while.
Yes,
yeah, good
even
to
with
see
you.
With me, yeah. It's been a while with me, let's say. Well, let's begin with news of African credit ratings agencies' plans to launch in the third quarter. What can we make of this?
Good news. I think this was coming out of the issue with the Hemzin Bank in issue of downgrading by FIP. And they just feel that most of these banks, especially developmental banks in Africa, especially were established for specific purposes, not like the normal conventional banks in terms of rating them. You know, they were downgraded. Those issues have gone on and off through forward payment. This is the way we are being funded by 53 African country treaty. I think that's what it's calling for. And again, there's a peculiarity in terms of African economic, in terms of African banking system, which I totally agree. But I think the basic international standard must be maintained, which has to do with the risks aside of it, how to meditate against risks so that you don't have so much failing institution in Africa. And also my fear is always that hope this rating agency will not be hijacked for political gain to give ratings that are not really commensurate with what they are on ground, and allowing a lot of issues to happen, especially in the financial sector and also in the larger economy. So that's my fear, but I think it's time we have an African rating institution that will have to deal with our financial institution. We'll have to look at the peculiarity of how we do business, how we lending, the type of lending we do, the period of our lending is different from what you have internationally and globally. If you look at the mortgage type of lending, you look at the forward type of payment, that is almost something new now with Hemzin Bank dealing with some of these countries. Sometimes not back with those cash, it's back with resources. So we need to look at, if you are telling them, then you need to look at the resources. Do they still have those natural resources that are supposed to fall back as mode of payment? If that is there, then they are not at risk.
So you welcome it?
I'm very sincerely
Yeah, let's look at how it will work. I would assume that, you know, this agency will focus on local currency risk.
Yeah, yes.
Because that's the only way it really would.
But unfortunately, Abby, the challenge we have is that we don't even have so much trade within African nations.
There's that.
That's a big challenge.
There's that. And that's a legitimate concern. Well, let's look next at Ghana's economy. You know, very impressive for Ghana. We've seen them at the abyss and, you know, just rising to the top. What can we make of this? Is this growth sustainable?
It's sustainable if you look at what they have done. I mean, if Nigeria, we are celebrating 3.2% increment in our GDP, then we need to look at Ghana because, again, about two years ago, they have a serious issue that has to do with their payment of debt, even international debt to the World Bank and even to most credit institution lenders, even in their country that bought some of their treasury, their Eurobond and others financial instrument. But today we see how they've been able to maneuver their way through that. And they did it by looking at the people itself and looking at what really affect the people in terms of electricity tariff was reduced to allow people to have more money to be able to purchase things in the economy. And they also look at their vibrant sector, the cocoa sector. They also look at, and then they had oil, and also too, they look at ways to reduce inflation. And what they've done is just do two things to get this growth. They look at ways to improve inflation, and they also to make sure their currency are stable. And once that happened, you saw that growth was exponential. I mean, it started everywhere. Jobs were available. Then you saw the currency stable. They attracted more foreign direct investment into their countries. And they came again. They rescheduled their debts with some of these institutions. And that was a game changer for them.
So some very deliberate efforts on the part of Ghana, which would make the momentum, you know, very likely.
Yes, very likely, especially with their current government that came in and they're doing a lot of reforms that will also reduce corruption in the system. This is a big lesson to Nigeria.
Well, it certainly is. And, you know, very impressive because Ghana has really, you know, been
through our neighbor, yeah.
Absolutely. So lots to learn from that. But let's look at one of the biggest stories this week as well. That's Nigeria's finance ministry, of course, rejecting claims around the collapse of a $5 billion oil-backed loan initiative. Let's get your take on this first.
I don't know why they are denying it, but again, we have not seen it. If you remember when the president went for this visit to Saudi Arabia, where this deal is almost over a year now, we've not seen any deliberate action to make sure this funds comes in. Like that report said, mostly driven because of low oil price. And again, also, not just the oil price, in terms of this loan was supposed to be paid with forward payment. That we're supposed to pay it with crude oil sent to Saudi Arabia. And you know, we are struggling with meeting our crude oils, even OPEC quota of even 1.5 million barrel and the benchmark of 2.02 million barrel. So Saudi Arabia are looking at it. They are not Father Christmas like we normally would do. They are looking at it critically and to see whether this works. And again, if you say the reason is to make sure we have a stable currency, I think the CBN have prided themselves these days that they've brought stability to the currency. So if they brought stability to the currency, well, there's no need for it. And again, if you look at it again, we collected from Exim Bank about 3 billion from was using the NNPC also through forward payment. How much of that effect have we seen in bringing down stability in the exchange rate? So 5 billion coming into the market, and CBN is saying we don't more intervene in the FX market. For me, it's you say this thing and then you are trying to do the other thing. In as much, if those 5 billion is coming into the market just to make sure that we use it to back more infrastructure, create more oil and gas policy to attract more foreign direct investment into them, that would be good. But if it's just coming in just to stabilize the exchange rate and then you use your scarce national resources to pay up to forward payment, I don't think it's anything that we should celebrate. And like I said, we've done one before. How that impacted on our local currency and the global currency? The effect has not been felt.
So you're questioning both the necessity for this to start with and, you know, the viability of it in the long run as well.
You learn by history. If we've done something before, we are not seeing the result. Why are we going to do it again? That's what I'm saying. We collected 3 billion from Exim Bank. We've not seen any result in that. We've not seen a stable currency. I mean, it has taken years that we collected that fund from them. We've had forward payment. We've been paying them with our crude. And that also is responsible why we are not meeting OPEC quota. We are not even struggling to meet local production. Dangote refinery still import crude from other parts of the world. So I'm not excited about it. If right. It's come too long. And again, like I said, it's not helping us. So
I would imagine that you're actually, hoping that this refutal
is actually
the...
Yeah, because again, the CBN is already saying we are in a corridor of stability, or I'm saying corridor of stability. Let's say we are stable unless we want to move it further than that. Remember, the CBN have used one new terminology. The Naira is not competitive. Sure. So are we now saying that when we bring in this one, will it make the Naira more competitive? Will it make the Naira more stable? That's a question that they need to tell us. And if they say it's to bring stability and competitiveness, fantastic. We see, like I said, we keep on coming up with terminologies in terms of where we are having challenges. Before now, we talk about the stable exchange rate to make sure you attract foreign direct investors, portfolio investors. Now we've changed it to where Naira is competitive. So much in terms of terminology being used.
Right, and of course, some very legitimate concerns you raised there as well. What are mere words at the end of the day, right? Let's look next at JP Morgan flagging $120 to $130 per barrel in the event of worst case outcomes. I'm
excited about that. I mean, I'm not very excited about that, but I'm sure the government will be very excited about that.
Certainly. Oil
benchmark today, as at what I was listening to your program, I've gone above the government $75, they're doing $78 as at yesterday, and we are not going to see the end to that anytime soon. We feel that what we're getting is anything to go by. Those strikes still happened yesterday evening up to this morning, so definitely we could see a jump in that. Now, the beauty about it is that we might not have so much. That could also reduce our budget deficit. That could also help us begin to build our sovereign wealth fund, which is fantastic for the government. That would mean the 3 tiers of government might earn more money. That's also good for them. But again, when you look at the local economy, that what we're going to see is that the price of local refined product will have to go back based on the deregulation policy, because outside the Naira to dollar deal that was broken by this present administration, that has been what has created stability. But now when the price goes up, remember that we are selling it at international price, but Dangote is only allowed to pay in Naira. So once you start paying more, definitely the price will have an impact. And if you look at 7%, it has done between, almost 10%, it has done between the beginning of this week to the end of this week. Then we should be prepared for a hike in PMS anytime soon.
All right, certainly that ripple effect, we're going to have to see it. There's only so much we can do. And of course, there are a few other key factors like broader conflict amongst regional producers that we'll have to, wait and see. But I want us to make use of the rest of the time we've got. Let's look lastly at China and Turkey renewing a currency swap deal worth almost $5 billion.
Abby, that's fantastic. And that tells you what we've been saying. they look at the volume of trade between them and China and then realize that the currency swap deal will help both nations. They are not having, in terms of surplus in import or surplus in export, seems to be a manageable percentage in terms of import and export. So that is what an ordinary swap deal will do. You don't go to do a political swap deal like what we had between Nigeria and China during President Buhari time. Up to this moment, we don't know what has become of that, because the volume of trade between Nigeria and China is higher in the China side than in the Nigerian side. So, but now you see the volume of trade is equal. A swap deal makes it very easy for businesses to move, to expand. Also, it brings stability into those countries between China and Turkey, which is good. I think we should learn the lessons. Why we've not seen that African Continental Trade Agreement? Volume of trade within Africans are not there. Why have we not seen that currency swap deal? We realize that 90% of Nigerian manufacturers still import things from China. How much do we export to China? So what it means is that China will have your own currency just stacked in there, while their own, this is not so much, coming to you again in terms of their businessmen coming to do more businesses. So I think it's a lesson. And again, we must also begin to look at which country are we having so much trade with, and then swap deal. Swap deal, the beauty about currency swap deal is that it creates stability into your exchange rate. Just imagine if Nigeria have a swap deal with China, what that would do to the local currency and also to the larger business community.
Absolutely, not to mention, bilateral trade and liquidity support in, of course, local currency. As you've mentioned today, Mukhtar, it's lessons, lots we can pick up there. I want to thank you so much for joining us on the Business Week. As always, Mukhtar Mohammed, if you're just joining us, we've been having a chat with the CEO of Finance with Mukhtar.